What's going on, everybody? Kris here. Wanted to do a quick one for you. I've been posting up a bunch of stuff about different types of renovation loans. I have a lot underway right now. Definitely thought it was a topic to discuss, and it's appealing. It's really interesting. So let me get this right. You can go out and buy a house in rough condition, horrible condition, and I'll give some examples here in a minute. And you can actually get a loan to purchase that property and renovate that property after you close escrow and get the home that you actually want, right? And typically you're going to be walking into equity. So let's talk about the different types of loans today. You got a 203K, and that's what most people know is the FHA 203K loan. It's a renovation loan. But there's also a VA renovation loan, and this is all these for purchase. All of these for purchase. You have one for the VA. The VA has one as well, and so does conventional. So let me give you some examples. I had this guy, really great client. He owned a construction business. He wanted to have some land. This was his vision, right? And then we started talking about it. He wanted to get some land where he could park his equipment on his property, which would save him a ton of money. On top of that, he wanted to have enough land to where he could eventually build two other homes for his daughters. Each one of his daughters have his grandchildren. He wanted to have them closer. He found this property. It was in Menifee, California, and it actually was three separate lots, but they were selling all three lots together, and on one of the lots was a home from 1947. It had been vandalized by some high school students. All the windows were smashed out. The flooring was just ripped up, holes through the walls, spray painted, just in horrible shape. Everything was removed. The appliances, of course, California. Somebody had gotten in there and got all the copper, little copper gnomes show up and start stealing the copper, right? And and we started talking about it. I says, well, hell, you're getting a smoking deal. It's three separate parcels. It meets the need for your daughters in the future. And there's a different type of loan product we could talk about for that. But this house, he says, but the house is a mess. It's going to cost so much money. Is it? Let's talk about it. Let's look at what it costs versus cost of renovation versus the after repair value. He was qualified pretty well. So we'll talk a little bit about that too. What does that look like? So let's say, I was talking to a guy yesterday. Let's say you're qualified for, I don't know, 400,000. Actually, you know what? I'm going to use an example of exactly a home that's going on right now. This property is amazing. He's using an FHA 203K loan. And then I'll go back to the other guy. So it's a manufactured home on 2 acres. It has a 4-car garage. And when I pulled up, I actually showed up to go meet the borrower and also the contractor, because I do a lot of construction stuff. So I went out there to meet the contractor, and we were discussing what are the minimums for the FHA loan. So we make sure that we renovate it. They literally took the people that live there. They should have their own TV show. It was rough. I mean, rough. It was hoarded. The pool, there's a pool full of trash. And then in the house, just walking up on the house, they had taken sticks from trees and stuffed them into the different holes that were through around the house. There was like a window, and at the bottom of the window was a giant hole, and they stuck sticks in it. I guess that was to keep critters out. They filled the holes in the side of the house with sticks. They had a box fan strapped to the roof where the roof had collapsed in. I don't know why. No clue. The house had, it's supposed to be level like this. It had settled like this. So the house was literally on the foundation tipping. And it's in rough shape. But here's the thing. He's getting it at a smoking deal. A smoking deal. So, and it's wild because the actual renovations, because what he wants to do is do the minimum amount of renovations required to meet the FHA guidelines. And then he, over time, is going to work on that home himself. He's a handy guy. He wants to do it himself. So here's the numbers. He came in, I think it was like $300,000. He's putting $55,000 in renovation costs into the house, right? And when this property is done and it's as is condition, after the minor repairs, or really the repairs to get it to the minimum standards for FHA guidelines, that house is going to be worth over $600,000. It's a great deal. So he can get an affordable house that is a great home. It's just busted looking, right? On land. And we're going to be doing the FHA 203K loan. So let's rough it out what it means. It is a loan where you can purchase a property, and after you close on the house, you can do the renovations. You have the money left over to do the renovations. Let's talk about how this shakes out. Some sellers are very concerned whenever they hear this loan. And the reason why is not many lenders do it. And it feels shaky. It feels shaky because they don't understand it. But here's the thing. The seller's like, well, it's not going to appraise. Great. We don't care if it's going to appraise in its as-is condition. From the appraiser's eye, the appraiser is going and looking at the house, and he's taking side by side the information that the builder or contractor submitted. Hey, we're going to be doing all of these renovations. He looks at it in its as-is condition. He looks at it after renovation, what it's going to be worth, and then he thumbs it up. That's it. So as far as the seller is concerned, this is probably great for a lot of these homes that are in horrible shape, just like the first one I was talking about, where it was gutted on the inside. They were concerned about if it was going to appraise. We don't care if it's going to appraise in its as-is condition, and we're still going to be able to close for you on the time agreed upon by the contract, and you get your money and you walk. Once we close, then the bank will actually release money, so there's going to be draws that are involved, release money to that contractor to start and do those renovations. It's pretty rad. Now, can you live in the house or not live in the house while it's being renovated? It depends on the condition of the home. I did one out a little while back. It was actually a manufactured home too. And the subfloor, there was just holes in it. You could fall through the subfloor, and it was pretty soft in other areas. So for safety reasons, the contractor says, look, until I get new subfloor down, I don't feel good with you living in the house. But once I do, then you can move in, and then we could work around you and do the rest of the house and the renovations. So this is what I want to talk about. What is it? Any type of renovation loan, purchase renovation loan. I think we should say that, a purchase renovation loan. So the FHA 203K, the VA renovation, purchase renovation, or a conventional purchase renovation, right? The intent is that you're buying a house, you're in whatever price that you choose, and then with the money, so if the house is $200,000, you're approved for $300,000, that leaves you about $100,000 for renovation. That's the easiest way of viewing it. Then you do the renovations after we close on the sale of the property. Renovations start right after. So what does it look like? Here's a step-by-step. I'm going to give you a step-by-step, and I have notes right up here so we can literally walk through it. So first one, pre-approval. It's all about pre-approval and budget planning. What's really cool is if it's an FHA 203K loan, it's just an FHA loan. So when we give you that pre-approval, whether it's conventional, VA, or FHA, I'm going to approve you for $400,000 VA. I'm going to approve you for $400,000 FHA. I'm going to approve you for $400,000 conventional. That is your budget. That's really how you kind of have to look at it. So you could say, well, if it costs this much to buy the house, $200,000, and it's going to be $100,000 worth of renovation, it's going to cost me approximately $300,000 in total cost. I was approved for $400,000. I'm getting it for $300,000. This is a huge win, right? So you're going to start that pre-approval. I can't express this enough. Wherever you are, if you're watching this in whatever state that you're in, if you're going to do this, get a lender that knows what they're doing. I've watched it. It's anguishing to watch when somebody gets with a lender that doesn't understand construction, doesn't understand renovations. They've never even stepped outside of their office to touch dirt with their boots on. They don't understand how it works. They don't understand what to ask the contractors. They've never done these loans. Just because you have the ability or the product to do it doesn't mean you probably should work with somebody that has that. They should probably have some experience. Just my thoughts. You can do whatever you want. But get somebody that does these loans. So first thing, pre-approval and then budget planning. Once you get done with that, that's when you actually start the property search. The lender should have already really deep dove with you on everything you need to know when it comes to, as you're doing the search, what kind of house you need to purchase, how much on renovations. But I'm going to put this side by side, right? So when you're doing that property search, I would highly recommend that you already start hunting. If you don't already have one, start hunting for a contractor. You should already, if your mindset is, I'm going to buy a beat up house and I'm going to do a renovation on it so I can actually come into equity or just have your dream home the way you want it, you should already be hunting for a contractor. It should go, in my opinion, side by side with searching for that property, the property search. Once you find the property that you like, okay, so I'm going to tell you a little secret. And I warn every agent. I got one right now that I told the agent, and she's like, Kris, you totally told me. I totally get it. It's no stress. There are two things that will slow down these loans. So, can we do a 203K loan or some type of purchase renovation loan in 30 days or less? Yes. What will mess that up? Not the lender. The lender won't mess it up. It's going to be the contractor or the client. I can't express this enough. Contractors are busy. They're working on other jobs. They aren't always going to move as quickly as we need them to move them. And I'm going to talk about it. So whether it's a contractor estimate, the paperwork that they need to provide to the lender in order to get it done, there's a bit of stuff that the contractor has to do so the contractor can get paid directly from the bank. But they don't always move very fast. And sometimes they're just like, well, what do you need that for? Well, the bank wants to make sure you're not going to run off with their money. So as I've said before, there's only two things the bank cares about. When I say bank, for the people that are probably like, it's not a bank, it's a lender. Okay, so I'm a mortgage loan originator. I originate loans for a lender, the bank, but I use the word bank because it's easier for everybody to understand and it makes sense, right? So they only care about two things: protecting their asset, because if you have to borrow money for something, just like your car, you don't own it until you pay it off. Therefore, it's theirs. They want to protect their asset and they want to make a profit. Oh, that's mean. Why are they making a profit? It's bad. You don't have the money, correct? You don't have the money. Then you got to borrow the money. And why should somebody give you money for free? Doesn't make any sense, does it? Good. So they only care about two things: protecting their asset and making a profit. Part of protecting the asset is making sure that that builder or contractor is actually legit. Do you have good credit? Has your business been around for a while? Have you done other projects like this before? Uh, you know, okay, are you licensed? Are you bonded? Are you insured? Because they don't want somebody that's just like off the street, a handyman, handy woman, handy person, right? That's like, oh yeah, I can do it for you. That's not licensed or insured. They come in and start cutting out stuff and something goes horribly wrong and then the bank loses. Why would the bank want to lose? So make sure you get a contractor. It's going to be important. Set them up in front. Next one, clients. If you're an agent, you're watching this, you got to stay on your clients and say, look, as we move through this, if this is what you want to do, you have to move relatively quickly. You got to move at a clip, because this is the thing. Once paperwork gets to me, I have to usually send it off to other people, and there's turnaround times to include, depending on what type of thing is, we might have to bring in HUD. And this is specific to California. And trust me, we're in multiple states. We do this all over the country. However, specific, if you want to get into California, there's HUD. So there's going to be times, there's going to be turnovers, there's going to be inspections, there's going to be people that need to see things, there's going to be appraisals, there's going to be paperwork submitted, there's going to be conditions that are submitted back from the bank to the client. Hey, fulfill these conditions, we'll give you the loan. So you want to move as quickly as you can. So next, once you actually do the property search and you submit an offer and it gets accepted, then you want to get the contractor estimate. So you need to make sure you get the contractor out there with the client. I can't express this enough. Get the contractor out there with the client. Have them walk through it and have the client say either A, this is my budget, or B, these are the things that I want done. How much do you think it's going to be? And if it falls within the budget, everybody's happy. Either way you do it, they need to walk through together, and then the contractor needs to provide a budget, ideally an itemized budget, right? So it's going to cost $55,000 in order to accomplish the things that you want, to make sure it meets the minimum guidelines, or to give you that brand new kitchen that you want coming into this house, whatever it is. Because that's the thing, you can kind of do whatever you want. Oh, but this is a great one. I just had this happen recently. Somebody loved this house. They love this house, and they're doing a deep discount on this house because the roof is wrecked. So the roof, the house needs a new roof. It's $13,000. And the seller's like, I don't have money to replace the roof. If anybody goes in with any other type of loan, they're going to demand that the roof gets fixed prior to actually closing on the loan and funding it. And if the seller can't provide it, well, guess what? Maybe we could work something out here. Are you willing to pay for it? Yeah, I am, but I don't have the money. No problem. How about this? How about we change this into some type of renovation purchase renovation loan? You back off that money for me. I'll do the roof after we close escrow. So again, for the agents or the clients out there, these little things like that, this is a great opportunity to do that. So anyways, long story short, contractor estimate. Once contractor has that estimate and can show that to me, then we're going to submit the loan. So I want to make sure that that's understood too. because a lot of agents go, well, why haven't you haven't even gotten an appraisal or submitted a loan? Can't. Need the estimate from the contractor. Can't do anything until we get the estimate from the contractor. Once we get an estimate from the contractor, then we can actually submit the loan to underwriting and start the underwriting process. That's where we get our conditional approval. That's where we're going to get the loan estimate. That's when, once the loan estimate is signed, that's when we can actually submit for the appraisal. We can't do any of that until we have the contractor actually provide an estimate. So it's very important. That's why I said the contractor will slow us up. Every day the contractor doesn't send it, it moves 1 to 2 days to the right. Just put it that way. So the one that I was telling you about, the contractor, it took them 2 weeks. We're in escrow. It took them 2 weeks to get the estimate to me. And I warned the agent, I warned the clients, I even called the contractor. And when the agent called and said, hey, we're coming up on contingencies. Can we lift loan contingencies? I said, remember when we had the conversation and said, I cannot move forward with anything until I get a contractor estimate. Remember when I told you 2 weeks before you wrote this offer on this property that the one person that will slow you down is the contractor? Do you remember? Do you remember when you went out to look at the house and you thought this was the one? I told you get the contractor out there to start the process right now. Well, guess what? We're 2 weeks over. I just got it. I have to submit the loan, and we still have to get the loan estimate. We have to start TRID, then get the loan estimate, and then sign the loan estimate, and then submit for an appraisal, and then wait for the appraiser to actually go out there, do the appraisal, plus fulfill conditions before we can actually get to a clear to close. So I'm telling you, I can't express it enough. The number one hang up that happens every time is almost always going to be the contractor. Next, we're going to submit the loan. We're going to submit the loan. So I just told you the loan process of what we're going to go through in order to get to a clear to close. And on occasion, somewhere we're going to slide in that total condition to clear to close is going to be HUD if it's in the state of California or something. In pretty much every state, they have something like that where it's kind of like in a little bit of an oversight to make sure that it's going to be good. But the next big one is the appraisal. The appraiser is looking at ARV, after repair value. They are not looking at it in its as-is condition. And that's what usually stresses a lot of people out. Usually the agent gets stressed out about this because agents, and there's amazing agents out there, but they're very used to what they do. And for them, they're always stressed about the appraisal, right? So they're usually stressed out about inspections or stressed out about the appraisal. Here's the thing, the appraiser does not care about what it's like in its as-is condition. All they care about is looking at it in its as-is condition and setting it side by side with what the contractor is going to do, what they've written out on that the estimate, right? So the itemized bid. And then saying, well, based off of the itemized bid, for what I physically see and with my eyes, I'm going to say that the after repair value is this. As long as it's over what we're borrowing, at or over the amount of money that's being borrowed, we're good. We're ready to go. Okay? So that's the appraisal. Once that gets done, then we're looking at a loan approval and closing. It really is straightforward on that. So we get the final approval, we close and fund. The sellers walk away. Now the borrower gets to start their fun stuff. The renovations begin. Renovations, so the contractor requests the draws directly from the bank, inspections throughout the process. So that way the borrower, so if you're the client, you can have confidence knowing that your contractor is being managed by the bank, because if the contractor wants to keep getting paid, they have to keep getting inspections to ensure that they're doing the job that they said that they would do in order to receive the money that they're getting. Now, I always highly recommend that the borrower still continues to follow up with them anyways, and it's also a great experience I found for a lot of agents that keep going out there as well and staying in touch even after closing. A, it's going to give you a lot more business, but B, it really comes to providing just really top quality service for your client. But I can't express this enough. If you're an agent, this is such a unique space and it's such a fun space to be in. You get to get outside of your office. You get to hunt for kind of, lightly used or heavily used properties. You get to help people build their dreams, build their equity, and do something that's just way outside of the norm that I think most people are really hungry for right now. Look, home prices are high. They're expensive. How cool would it be if you were one of the few agents that actually said, hey, I do this really unique thing. I help people go out and hunt for dumpster properties, and then we help them renovate it to become their dream home. It's pretty cool. And how you do it is using a VA renovation loan, FHA 203K loan, or conventional renovation loan. Now, the final step of the process, final inspection and completion. At this point, it ensures all work is completed and agree to final draw request for the contractor. After that, you move into your dream home and everybody's happy. You forget about all the pain. You only say, oh my gosh, that was amazing. It was the best experience of my life. Thank you, Kris McCullough, for the loan. Thank you, person agent, for being my agent person. Thank you, builder contractor, for making my dreams come true. And then they start the next chapter of their life. So I wanted to kind of do, even though it's taking longer than I normally do videos, I try to keep videos anywhere from 5 to 10 minutes long. But when I do my face videos like this, I want to do a long burn video where I try to do my best to give examples and explain as deep as I can. So everybody that's watching, and plus I use a lot of these for my own clients. When people reach out, I was talking to a guy last night. I did a 203K AI video just the other day. I was talking to him last night. I was explaining it to him, and I wanted to say, that's why I came in this morning into this one. I wanted to go, once I get done with this, I'm going to be able to text it to him. So I take these videos and I text them to my clients. So that way it gives them a chance to just take in the information on their own and then ask me questions if they have it, or go a little bit deeper if they would like. And then for people like you that are out there in YouTube land, usually that's where everybody watches me, they're able to jump on there and get a little extra education on the 203K loan. So anyways, that's all I got. I appreciate it. Remember, like, subscribe, check out my stuff. I have hundreds and hundreds and hundreds of videos. And yeah, if you ever need anything, any state, it doesn't matter if I provide service to the state or not. I get people from all over the country asking me questions when it comes to real estate, whether it's loans, whether it's process, whatever. I even get a ton of agents that reach out to me asking me questions about how to generate new business, how to take care of a client, whatever it might be. Just call me. I had somebody, I think I mentioned this in one of my videos. They're like, this is a bot. Just because I do some AI-based videos, I still write out the scripts and do everything myself. It's just a different way of trying to make sure I put out content. I'm not making any money off of YouTube. I'm just creating stuff because I think it's important that people get it, and it gives me an opportunity to share it with my own clients as well. So that's why I put it on here. Share it with somebody that needs the information as well. Appreciate y'all. Have a good one. Talk to you soon.